Welcome to Street Check, the best podcast in the history of Cabot Wealth Network, which has been bringing individual investors some of the best investment advice, research, and ideas since 1970. I'm Chris Preston, Chief Analyst of Cabot Stock of the Week and Vice President of Content.
And I'm Brad Simmerman. I'm the Chief Analyst of Cabot Wealth Daily and the web editor here. Today, we are going to be discussing earnings season, what we're seeing so far with somewhere in the neighborhood of half the companies having reported. We'll move on to talking the Fed's latest rate hike and overall macro conditions. And then we will talk EVs. And after that, we'll invite on Cabot Explorers Carl Delfeld to further the conversation around electric vehicles and to talk international investing.
Yeah, and before we get to your defend the take, Brad, last week we sat here we had on guests Mike Santolo and Jacob Mintz, and one of the very final segments we talked about was the Barbenheimer craze. Barbie and Oppenheimer both came out last week, both done incredibly well. I think Barbie's over $200 plus million domestically.
$500 million worldwide.
Is that right?
It's already over $500 million worldwide, and I will probably be seeing it this weekend. I'm looking forward to it.
Yeah, and then Oppenheimer is over like 100 million domestically. It's like I think it was the first time that two movies in one weekend had grossed as much as they did. There've been only like three bigger weekends ever, but those were all basically one movie was taking up, like when Star Wars or one of those Avengers movies.
Yeah.
So you have not seen either, right?
I've not seen either.
Yeah, I saw Barbie. As I mentioned to you, I feel I feel secure enough in my masculinity to say it was great, and I have no notes, as I think
I know that's part of why I'm seeing it. Your ringing endorsement. I think you and I have very similar movie tastes, so I'm looking forward to it. It won out over Oppenheimer in my household, it turns out, so we'll be seeing it probably tomorrow.
Same with mine. Yeah,
but we have kids, so.
True. Yeah. We did not bring our kids yet, but we may go back and bring them. We'll see. Okay, let's get into it. So your defend the take today, Brad, for which, as always, you have 90 seconds. You think that travel stocks will be the best sector for the rest of the year. Again, 90 seconds, go.
Okay, so my overall take on this, I'm going to borrow from Jacob, who mentioned this last week on the podcast. We're in sort of a rolling bull market, right? A rotating bull market where certain sectors get hot, cool off as trade rotates into other sectors. Cruise lines did really well this week. Royal Caribbean was up 10% after reporting earnings that far exceeded expectations. They raised their full year guidance from I think $4.20 to $4.50 to $6 to $6.50. So it's a big beat and raise for them. I do think cruisers are a little bit overcooked at these levels, but I also think that we're seeing something that you and I have been talking about for the duration of the podcast. The consumer is resilient. Consumer spend carried us through what could have been a recession, and we'll touch on that later, and has now pivoted to travel. That is a trend that will stick around for at least the rest of the year. I think you target decently valued stocks in the travel sector. I mean, you could go out and buy somebody like Jets, which is fine, but Southwest is down 10% in the last week, right? So it's like the companies that are actually delivering are outperforming. Somebody like a United Airlines at 5 times forward earnings, I like a lot more than Royal Caribbean at 25 times. But I think what you'll see is maybe lulls in certain segments of travel, so hotels, cruise, airlines, et cetera, that then re-accelerate heading into the quarterly earnings reports. So if I had to pick a single sector to sort of play in, this is would be my top pick, with our EVs probably coming in second, which we'll touch on later. But I like the strength in the sector. I like the strength of the consumer.
You finish up.
I be a sort of a picker and chooser in this sector as a whole, and I think it'll work out really well for the rest of the year.
Yeah, I mean, travel, the sort of, what did you call it a few weeks ago? Revenge travel, all the people who missed out on going anywhere for 2+ years, thanks to COVID, are now out there. I mean, just anecdotally, where I live, feels like almost everyone we know has not only gone somewhere this summer that that's outside their usual, just going to the lake with their families for the weekend or whatever. We've friends who've been to Italy, friends who've been to Iceland. Not just a lot of it's international travel, and I'm sure I'm seeing that here. That's the type of thing that's happening a lot of places. We saw that. We've seen that for maybe a year, but I think it's expanded more, and now people, cruises were like kind of a four-letter word during COVID, and now like that stigma seems to be slowly burning off a bit, and people are more open to that idea.
Yeah, Royal Caribbean reported record bookings on record prices, right? Like people are spending more, and they're happily spending. I mean, we just booked travel to Japan for October because it's a bucket list trip. We have excess savings. We've been sort of cooped up. I mean, we did Disney, we did Mexico, and all got COVID from it. So we typically do one big trip, so it's not that out of the ordinary, but we dug a little bit deeper to do the bucket list thing. So like you were saying, anecdotally, I'm seeing the same thing. Nancy wrote about it in her Cabot Money Club magazine last month. Mm-hmm. So anecdotal is still part of the trend that we're seeing reported.
Right.
Let's, I've talked about Royal Caribbean a couple of times. Let's talk about earnings in general. As I think I mentioned to you, the last statistic I had seen, 81% of companies reporting of the S&P beat expectations, but then you had actually a counterpoint to that had surprised me a little bit.
Yeah. So the data I have is from FactSet, who's the best at tracking earnings, and there's data 6 days old. A lot, especially right in the heart of earnings seasons, can change in 6 days. They had the predicted earnings estimates decline for the quarter was 7.1%, I believe. So far, with just a fifth of S&P companies reporting, goes down 9%, but actually their estimates have revised to an even 7%. So it seems like it hasn't really changed their thinking. But again, this was 6 days ago. I wonder if the last few days have improved things, especially now that 81% of companies, you say, have beaten.
It's 81% of the 49% that I had seen that had reported. I may be conflating some of these statistics, so but I
think the bottom line is that stocks are up in the 2 weeks since earnings season started, and if they are down, if earnings are down 7 to 9% or whatever on average, it's not bothering people.
Yeah, the market had discounted earnings further than, so analysts, FactSet estimates, right? They discounted 7%, but I think the general investor sentiment had discounted it much more. They were envisioning a sky is falling scenario where nobody, where companies are losing money hand over fist. And what we got was a surprisingly strong economy buoying the markets. Earnings falling less than people were afraid of. It's the soft bigotry of low expectations, right? Like investors not thinking that a company can actually deliver on earnings and actually deliver like they say they are going to. But what the companies have been telling us is playing out. That's across sectors. It's EVs, travel, it's everywhere. And I mean, we'll get to this in a minute, but the Fed came out and said they removed references to recession in their latest announcement. Yeah. So everybody was Chicken Little for the last 4 months, 5 months, right? Coming out of the bear market. And it turns out that it was an overreaction by investors, which is common. But it's going to be, I think it's great for the market, and it's probably going to be great for the market for maybe the rest of the year.
Yeah. And that leads us into number 2 in our big 3. You mentioned the Fed. It did report this week. This is the most ho-hum Fed meeting we've had in a year and a half. It was literally almost 100%, 99 point something percent expected them to raise rates another 25 basis points. They did, and the market seems fine with it. It barely reacted. in some other numbers came in this week. 2.4% GDP growth, where 1.8% was expected. That's far from a recession, or
Yeah.
even one quarter of on you need 2 quarters of straight quarters of recession or negative GDP growth, plus the Illuminati whatever saying it's a recession, whatever that is. PCE said came in as expected, and now the Fed's saying no recession in sight. It's at least in so many words. Everyone seems to think this is the last rate hike. Inflation, CPI number down to 3%. Maybe we'll get into the twos, which is sort of the magical number next month. There's actually 2 more inflation reports between now and when would be the next rate hike or Fed meeting in September. You think this is it? Is this the top? You should speak on it more, because I've twice over been wrong that they were going to hike, not going to hike again, and they did.
I mean, yeah. So I'm actually working on something on how to sort of read the Fed's mind. If you look at their supplemental materials that they produce quarterly, you can see what their expectations are. So look at the supplemental materials, see what they are tracking for like the rest of 2023 into 2024 and into 2025. If the numbers are ticking those boxes, you can assume that the Fed is going to do what they say they are. So they are going to be data driven. Like you said, there's going to be a couple more reports before they have to make the next decision in September. I think they're done. I think if all the trends that we're seeing with inflation, with the economy are still in place, then I don't think they have any reason to hike rates anymore. And I think we can finally be done sort of talking about it.
Yeah, hopefully this is our last Fed until they convene again in September. But even then, I don't think people are going to be expecting it. And the story would only be if they surprise and raise. And I don't see, if inflation stays at current levels or below, I can't see them doing that. I don't see the need for them to do that.
I think whatever move they make is going to be well telegraphed. As part of them trying to reinforce that they're data dependent, they're looking at the same information that we get when it comes out. I think they're going to continue doing that. And if inflation unexpectedly rises, I mean, that's really the only sort of criteria that I can think of that would prompt them to hike rates at all. So it would be unexpected increases in inflation. So if we continue to see things trickling down, I don't see any reason for them to deviate from the plan. Yeah,
the market's Michael Myers for a year and a half or over a year at least, is dead, it seems. Of course, those things, those cheesy horror movie villains do tend to come back even though you think that you killed them a million times. I think in this case, hopefully that won't happen. Okay, number 3 in our big 3, we want to talk about, as you mentioned, EVs, electric vehicles, having a good year. Tesla's more than doubled this year, despite a pullback after, I guess, slightly disappointing earnings or more margins in their last report. BYD, the Chinese giant, which tripled revenues last year after going from being sort of all-encompassing EVs plus transmission vehicles. They went into all EVs last year, and it's paying off. They've become sort of the Tesla of China. I think their sales actually outpaced Tesla in the first quarter of this year. They haven't reported second quarter earnings yet. Everything's trending up, and I guess we sat here a few weeks ago, and talked about how green tech stocks just never seem to get any traction. The green tech in the traditional sense, solar, wind power, and renewable energy companies that don't really seem to just not really excite people. Is all that energy, all the green tech energy or investor excitement, I should say, going into EVs, probably because they're cars and people love cars and it's exciting to buy an electric car?
I don't know if it's the excitement around buying an electric car, but I do think that EVs, other than the charging network, the infrastructure to build out EVs is more mature than the green tech infrastructure, right? Like if you want to build a solar farm, you need the land, you need the build out, you need the transmission lines, you need all that. But if you're Ford or GM and you want to try and accelerate EV development, you're sourcing batteries that are already being manufactured elsewhere. You're using manufacturing facilities that are maybe maybe take an upgrade, but are largely already available. We have the infrastructure to mass roll out EVs in a way that we don't to mass roll out green tech.
Right.
So I do think that EVs are where green tech maybe could be in a couple of years of infrastructure build out. But for the time being, it's, Tesla is in India. They have 2 development executives there right now, with the goal of building a new production factory there, with the goal of producing a $24,000 entry level Tesla that they would sell in India, and then they would also export to the US. I do think with EVs, it's going to be very similar to that travel sector thing I was talking about, where it's like you need to be identifying the companies that are doing the work and actually benefiting. So you need to sort of pick and choose your spots. You could go and buy something like the Crane Shares EV electric vehicle ETF, like a KARS, right? It's like the jets of electric vehicles, and probably do really well. But I think you're going to do better if you are targeting the companies that are meeting the moment. We saw Ford take a little bit of a hit because they alluded to their electric vehicle rollout being a little bit behind schedule. So I think you pick your spots, but that's another sector that I really like for the rest of the year.
Yeah, and it seems it was hot during at the tail end of the last bull market, 2020, 2021, especially after the COVID crash and things just went straight up, then took a hit, and now it's back. It's almost like, the recession, I guess, is true of a lot of things, but especially with EVs, it's a red hot sector that, people weren't buying cars as much, when inflation was at 9%, and when there was whispers of a recession, or more than whispers. And now that those fears have been alleviated, there's sort of nothing stopping EVs from, resuming their major uptrend from, a year and a half ago or and beyond.
Yeah, they rode that initial hype cycle wave, right? Where everything EV related takes off, it peaks, it sells off, and then the companies that are actually where it's trickling down to the bottom lines, they're now in a position to ramp. I do wonder, and I'm just speculating, I haven't looked into it at all. I do wonder if the higher used car and new vehicle prices in general, and all the supply chain disruption that caused those values to skyrocket, I do wonder if people are looking at a 2019 Ford Escort for like $45,000 and saying, yeah, I'm going to pay 48 to get the Tesla Model Y.
Yeah.
Right. So I do think that there may be some consumer preference element that's been sort of forced by higher vehicle prices and the high levels of inflation. It would be something interesting for, I don't know, maybe somebody that has a podcast about finance to look into. So I should have done my homework, but speculating, I do.
Time. We will have more podcasts after this. We're happy to announce.
Yeah. Yes. So we will be taking a brief break and then bringing Carl Delfeld of Cabot Explorer on. We're going to talk all things EV and
he's Mr. EV.
Mr. EV, and the inputs to the EV marketplace, or not marketplace, the EV supply chain. And then we're going to talk international investing in more general terms as well, identify what countries he likes, and revive some of the discussion that you and I had around where to invest internationally. Yeah,
and we'll be right back with Carl. All right, let's bring on Carl Delfeld, Chief Analyst of our Cabot Explorer newsletter. Carl, you tell us a little bit about what Cabot Explorer is, first of all.
Sure. Well, maybe the best way, first of all, thanks for having me, and good to be with everybody.
Joining us.
The Cabot Explorer is a little bit a different animal compared to the other Cabot products in a few ways. First of all, it's a very flexible product. Basically, the Explorer tries to scour the world for the most interesting and promising stock ideas. And we do that by first identifying themes and trends which we think are high growth and enduring. And then we dive in and try to find the best stocks that can capitalize on that theme. So that's the so we can go anywhere in the world. Of course, they're listed stocks in the United States. The second thing is the range of companies that we recommend is quite broad as well. Sometimes they're blue chip companies, like, for example, we're going to talk about Toyota today. And sometimes they are micro cap companies selling, for less than 50 cents a share, but are very promising. And I'll identify which ones are conservative and which ones are aggressive or very aggressive. So readers, subscribers, can make the decisions best for their personal situation. So I'm very sensitive that people reading the Explorer come from all very sophisticated investors to beginning investors. So that's one of the major challenges in selecting stocks for the Explorer.
Yeah, and you mentioned that part of it in scouring the globe, you identify themes where you can find opportunities all over the globe, and one of those themes clearly you've identified, and Brad and I were just discussing this, is electric vehicles and any companies that are sort of adjacent to that industry.
Right.
Talk about what convinced you to become so bullish on the EV theme, and sort of what your process is for identifying the companies you like best.
Okay. That's a interesting question, because my background is primarily as an Asia analyst.
Right.
So my background is I studied in Japan as a student, and then went into finance and investments, again, centered primarily on Asia and the Asia Pacific region. And then I moved here to Washington, where I am now, worked on the Hill, and then with US Treasury, and then was on the board of the Asian Development Bank, which is like the World Bank for Asia. So that opened up Southeast Asia to me. So that's kind of my background and sort of the way I think. And with the reason electric vehicles caught my imagination is, of course, I'm following China pretty closely, and US-China relations very closely. And EVs have caught America, like so many other things, a bit napping. China has a huge lead in this area, and they're the center of the EV, what you might call ecosystem. So that's what drove me to EVs, because it kind of fits right in with what I'm following.
Right. One thing that I want to address for investors or for listeners that might not be familiar with the Explorer, when we're talking about theme investing, think of it as a sort of follow-on opportunity. So if EVs is the mega trend, what are the inputs into the EV supply chain? What are the components that are being overlooked that are presenting an opportunity that's not going to be obvious to everybody else? So when we're talking about theme investing, that's largely what we mean. I'm curious what your take is, if you've got one, on Tesla's goal of starting to produce in India. You've written a couple of articles for the Daily lately talking about how India is an opportunity if they can get their political and economic cards lined up. What are your thoughts on Tesla trying to expand into India?
Well, it's interesting. Tesla, it's an unbelievable story, very successful story, and it's interesting. Tim Lutz, who still is, was very involved with Cabot Wealth, and hired me basically at Cabot. I had several talks with him, and he always emphasized to me that Tesla's not just an EV company. Their goal from the beginning was to transform the turn the world and the United States into more of a tapping into the electrical grid, which goes back to, we're all experiencing hot weather, global warming, climate change. So above that supply chain you just referenced is climate change, trying to get emissions down, trying to halt what we're all going through. And so Tesla, that's definitely their mandate. For example, in India, they're going to try to build EVs, but they're also into electrical storage. So whether you have wind power, whatever the power is, has to be stored if you're going to electrify the grid. So I think it makes sense. I mean, they're big players in China. We'll see how that works out. And so going to India makes complete sense.
Right. Yeah. I saw that BYD, the Chinese, which is sort of the Chinese version of Tesla, it's becoming that. They're trying to get into India. I think that just fell through. At least this first attempt fell through. It was like
Yeah.
$1 billion
India.
investment.
Yeah,
Yeah.
right. I just read that this morning that India is blocking. That's going to be another interesting story. BYD for everybody, and I'll admit this is one of my recommendations. It's BYD. What is it? BYD.
BYDDY. Yeah, it's in my stock of the
BYDY.
week newsletter too. I love
Stock
it.
of the week. It's
Yeah.
a overlooked company. I'm a bit of a China skeptic, but I think this one we have to go with because it is definitely by far the leader in China. They make their own semiconductors. They have they integrated the supply chain, and they're going all EV. They used to do
Right.
both cars, now they're going all EV, and they're growing like a weed. And they're selling more EVs now in China than Tesla. And they want to go overseas. You're right. They're trying to get into India. India doesn't want them there, right?
Right.
They're already the biggest supplier of buses, EV buses in North America, which is interesting. They're going to try to get into the US market. It's going to be a very hot political issue in an election year because, you know, it's like going back to the way I look at China, it's like the US rivalry with Japan. Some of us remember when that was the big topic of the day, 25 years ago. China is a different animal because it's 4 times larger. It's dominant manufacturing. And it's not an ally, it's a competitor and a rival, even in the military areas. So we'll see how that plays out. But they are trying to get into India. BYD is also trying to get into Brazil. They want to be a global player.
I do wonder. So China, as I understand it, operates on a 100-year plan, right? Which means sourcing lithium from Mexico, Belt and Road initiatives globally. I think it's a very valid point to identify that U.S. regulators are not going to be friendly to BYD if they're trying to start selling in the U.S. I mean, you saw what happened just with all the outcry just around TikTok, and that's an application, let alone complex machinery with Chinese developed integrated circuits and semis coming onshore. I can't see that happening anytime soon. I do wonder if some of China's sort of failed Belt and Road projects, I mean, you read about hydroelectric plants that are over budget and underperforming or not even live. I wonder if that's burning the global South in a way that has India maybe taking a step back. And at the same time, Tesla has they've got a Powerwall storage plant that they're developing in Texas, I believe. Yes. I think Tesla looks like a better partner to me if I'm India, especially because India's a major offender when it comes to fossil fuel use. Still uses, I think, a majority coal to generate power. Yes. So if the promise is, hey, Tesla's going to build EVs and sell them here, but they're going to bring with it sort of the brain power and the brain trust and the development experience to start modernizing the grid. And a lot of the things that you've been talking about are similar to an Australian author and engineer who wrote a book, I think, called Electrify Everything or Electrifying the World.
Yes.
That was talking about like the single solution to any kind of climate crisis and to getting to a point of energy abundance. If we electrify the entire world, we've got the technology that we could be an energy abundant society.
Yeah.
So
we could be selling electricity to all over Latin America, Mexico. We could, we could be energy independent and much cleaner. But getting back to your story about India, I think Tesla is a better partner for India. However, India is a very protective politically. They haven't signed any trade deals. I don't know if you've noticed that. They reject every trade deal, very protectionist, high tariffs, like a Harley Davidson costs $1 million or something to get it if you get it in there. And so BYD, of course, in India, Chinese relations are tense. They share a 3,000-mile border, and from time to time there's clashes. So politics plays a big deal. Now, Tesla has played a smart strategy. Basically, where they make something, they sell it. Like in Shanghai. I think it's a risky strategy to some degree,
Mhm.
but the EVs they make there, they sell primarily in China or export to other markets in that region. They don't bring them back to the US,
Mhm.
which would be politically explosive. And so I think they want to do that in India too. But India, yeah, so India is an interesting story. And I think the other stock I just want to mention, we haven't talked about it, is hybrids, because one issue is that you probably have thought about and hear a lot about is EVs are great, right? Low emission, but what about all the stuff that goes into EVs? The supply chain you were describing starts at the mine, goes into the refining, processing, then the inputs for the different parts of the EV, the battery, and then it comes out on the other end as a Tesla or a Toyota or whatever. The emissions cost of getting that stuff out of the ground and processing it, in some ways offsets all the benefits of lower emissions.
Yeah,
So
I saw an
yeah.
interesting graphic on that a couple of days ago. My numbers will be off, but something in the neighborhood of 30 metric tons for a battery only EV over the life cycle of the vehicle versus 50 or 50, I don't know, maybe 50 million, 50,000, I don't know.
Yeah.
And 50 for a internal combustion engine vehicle. So it's, it's a 40% saving on output, but that's also a very important sort of ethical consideration for people that
Yes.
may be thinking, okay, well, if I'm ethically investing, so I'm investing with my values. If I'm buying Tesla stock, I'm advancing my desires to improve the global climate, to improve energy efficiency. And at some point, there's a demarcation line where you get into ethically questionable territory with those supply inputs. You look at something like cobalt, especially.
Yeah.
What are your considerations when you sort of approach that line? I know it's deviating from our topic, but I'm curious.
Yeah. Well, each company makes their own decisions, and of course, each consumer does as well. But I would say Tesla, the pushback from Tesla you'll get is that we're working very hard at ethical mining processes and refining and processing of these metals in a much cleaner way. And they're working on it, and a lot of people are working on it. And I follow this, a lot of stuff. There's a huge amount of stuff in pilot projects and stuff like that. So that's the pushback from Tesla. But what's interesting about the numbers you threw out there is Toyota, and I have it in my newsletter this week, I believe. Toyota has done a very in-depth analysis because Japan's strategy has been the hybrid strategy. And they just think it makes more sense. And I agree with them that the US should maybe look at that very closely, because they did an analysis and they say a premium EV, just one EV, a premium EV uses as much materials as 90 hybrids, which is a mind-blowing number.
Wow.
But I've checked it out. It's been verified by other, universities and think tanks and stuff, which tells you a lot. We have all these gas stations. So I would just say to someone, I mean, everybody makes their decision, but if I'm going to buy one, I'm going to start with a hybrid. Meanwhile, you can wait for technology to improve and you can upgrade at a later date.
It's funny. I feel like a lot of people have the same calculus. They want to dip their toes into, they're ready to go electric, but not with both feet yet, one foot. And my wife at that point she just bought a new car, and it's a hybrid. It's a XC90 Volvo, which is great. She plugs in, it gets 40 plus miles on electric, and it's sort of a nice starting point. I think a lot of people probably think that way.
Well, I see a lot of and I see a lot of people here have one of each, right? One regular car, one hybrid or EV, depending on, if they're taking a long trip, maybe they take the regular car. So, but with all these gas stations, I mean, where are they going to go overnight? It's not going to happen. U.S. consumer, we're only about 7% of total sales are EV or hybrid sales in the United States. It's going to take a long time for it to really take off here. In China, it's a different matter. Only like 50% people have cars. So that's why China, with 900 million consumers, there's no way anyone's going to beat them in EVs.
Yeah. Probably not. Carl, you mentioned that, you're looking for all kinds of themes in Cabot
Right.
Explore, sort of looking around the globe. Oh, is there another theme or two right now that really jumps out to you globally?
Well, as you know, I'm very big on Southeast Asia. I think it's a really fast growing. There's limited ideas. We've had some great ideas that made money, but there's not that many that are liquid. But on the same thing we're talking about, for example, on the batteries, one really important breakthrough project that a lot of people are working on, including Toyota, is solid state batteries, which would transform the business completely. It would be a big lithium play, but you get rid of nickel, you get rid of cobalt, you get rid of some of the rare earths you need. So we have one in the portfolio now, Explore Solid Power, SLDP, which is a Colorado company working with BMW. And then there's nuclear power, again, plays right into the same. There's smaller, it's controversial, but it's zero emission. They're finding much better ways at taking care of nuclear waste, and the cost is coming down as well with these small nuclear reactors and modular ones. And so I think we've had SMR, NuScale Power, and another company I know Chris knows. I think you had it in stock of the week. LEU,
Centrus Energy,
yeah, which is a nuclear supplier of energy inputs.
Yep.
And that is interesting. It's come back from 49 to 35. I'm taking another look at that. NuScale's come down from 15 to 7. So that's just some of the other stories. I mean, it's all on this same theme. And that this is as Brad said, this is the interesting part of this business is you looking at mining companies, you're looking at the whole thing. But this newsletter is not just about this, but we have a short time today, so I think it was a good theme to talk about.
So, Carl, off the top of your head, do you know what the weight comparison is like between the proposed solid state technologies and lithium ion?
I think it's significant because, and that's the big difference between a full EV and a hybrid is people don't see this, but if you when I was back in Colorado, Tesla had one of these outlets where you could come in, and they had a Tesla with the battery. You could just see the battery. It was just the battery on the floor of the car. Mm-hmm. It is massive, and it's full of all sorts of materials. A hybrid is much smaller. The solid state battery, it's not so much the weight, although the weight is less, but the performance what they call energy density is like 3 times a lithium ion battery.
So you get the same range as a Tesla at a third the size. At a third the size, though. 800,
900 miles.
The reason that I bring up battery weight is, we were talking about ethical investing earlier, and one of the problems with going full EV is pedestrian safety.
Yes.
The U.S. loves its SUVs. That's a consequence of marketing actions taken in response to fuel efficiency standards. So it was a cynical move by car manufacturers, but as a result, the full EV, which one is that? There's a full EV. Oh, the new full electric Hummer. I think it weighs 10,000 pounds.
Yes.
Is the curb weight. That's a death sentence for pedestrians and even for smaller vehicles, right? Like it's unsafe. And as much as it's an ethical benefit to electrify our roadways, there are moral consequences, and something that reduces vehicle weight while also improving climate impact strikes me as being a better outcome. So that was where my interest was coming from. Just
no, I agree. I mean, an EV Hummer sounds odd to me, but yeah, I remember when EVs first started, the Leaf, they were worried about that issue. When you're in EV mode, and they used to talk about they're going to put some sort of a warning, so it makes a sound even when it's moving down the road.
Yeah.
So pedestrians are alerted that an EV. It's like the scooters you see here in Washington. I mean, I've seen collisions between scooters and pedestrians. It's not pretty. It's pretty dangerous.
Yeah.
Yeah.
Carl, just last question before we let you go. You mentioned your background is primarily in Asia, Japan in particular, and you've talked about Southeast Asia. Is that is that where you are finding the most investment or outside the US investment opportunities, Southeast Asia now, or are there other areas that really are catching your eye?
Well, the way I would put it is, I think the way we're looking at investing is changing. It used to be like, this is a China newsletter, this is an international newsletter, this is a US growth.
Yeah. It used to be just China. You're right.
Yeah, right. That's the history of the Explorer.
Exactly.
And what I think we've come to the conclusion is it's not so important where the company you're investing is based.
Right.
It's where they do their business. Where do they get their revenue? Where do they get their profits? Where do they have their people? Like IBM has more employees in India than in the United States.
Wow.
It's kind of mind-blowing. I mean, is it an American company? And Apple, of course, makes 90% of their products in China. So is it an American company or is it a Chinese company? So that's another way to answer. It's just that I go wherever the ideas are, and roughly 50% of the ideas in the whole world are American listed companies. But Europe, for example, EVs, we didn't talk about Europe, but Europe is already 20% EV. And 20% of the EU market is now Chinese EVs.
Wow.
They're penetrating Europe quite quickly.
So, sorry, I'm going to follow on with that.
Sure.
We were talking about India, BYD versus Tesla in India. How much is price consideration a factor, do you think? BYD doing, $6,000 micro EVs or whatever versus Tesla's proposed $24,000 model. Is that a deal breaker?
Well, that's a big one because you're close. I mean, I'm sure there's $6,000 EVs in China or maybe even in India. Also is working on very low cost EVs. But I would say like BYD, their low end right now, it's called the Seagull, and it's a nice looking car. I mean, it doesn't look like a solo EV, which is like room for one person in it. This is a real car, and they're listing that right now at around 13,000 US. So even if you add, the Trump tariffs, which is 27%, you still have a sub $20,000 EV. And this is going to be the problem. There's going to be a lot of Americans who would love to buy that EV. Yeah, I'm sure of it. So, I think the cost factor is big. And if Tesla can get to that $24,000, I mean, I'm a little skeptical if they can do it. But I think that's the ultimate goal, right? Is to own the market.
Right. Yeah. Well, Carl, thanks for joining us today. And as we mentioned, the name of your newsletter is Cabot Explorer. That if you're interested in subscribing, Carl has just great ideas, including some little known companies you'll recognize, and there's companies that you'll never heard before from, a country, Europe or anywhere across the globe. And they're great opportunities with big stories. Again, that's Cabot Explorer. You can find it on the cabotwealth.com website under our advisory page. And also, Carl, do you want to plug your book real quick before we go?
Oh, okay. Yeah, I have a book out last year. It's called Power Rivals, America and China's Superpower Struggle. And
Amazon? Can I get that on Amazon?
You can get it on Amazon.
On Amazon. Okay. Power Rivals.
Any recommendations for Tokyo for me? I'm going to Tokyo in October. I did not know that you had studied in Japan.
It's a great place. Yeah, I studied in Japan. My only advice is, depending on how much time you have, is try to get out of Tokyo if you can. Because everybody goes to Tokyo and it's a great city, it's safe, and you'll really enjoy it. But if you can, even if you can like take if you have the time to take the bullet train to like Kyoto, that's a great trip. But even if you get there's little day trips you can take out of Tokyo and get on the train. I think you'll really enjoy that.
Yeah, we've been looking at a couple of those. One of our days has already been claimed by Tokyo Disney because my two kids will be with us. But if you have any day trips out of Tokyo, let me know. We've been looking at a handful, and figured I'd get some advice from the expert.
Great.
There we go. That ties the podcast all together. You opened up talking about travel stocks, Brad, and now you close by talking about your own personal travel with Carl. Exciting stuff.
Well, I figured I had to do a little bit more than you did when I asked you about your vacation plans. So
that's true. Yeah,
well, Brad, I just will end with Brad, bring me back some good Japan ideas, if you would.
I'll do my best, but I'm the biggest counter indicator that Cabot has. So anything I recommend, you probably want to stay away from.
Okay.
But if you have questions, comments, anything along those lines, email us at streetcheck@cabotwealth.com. Like, subscribe, leave us a review if you'd like. Carl, thanks for coming on. Chris, anything else?
No, thank you, Carl. And we'll be back next Friday. And until then, thanks for joining us.
And smash that subscribe button, peeps.